Good morning, everyone. Once again, this is Black Forex coming to you with another market analysis video. This morning, we're going to be looking at the USDJPY. Now, before we go start to break down this currency pair, we have to say that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can especially improve your ability as a trader and put a little bit of extra money in your pocket, especially in these times of very high prices of gas and consumer goods. Okay. Now, with that being said, let's go ahead and break down this currency pair. Now, since you guys have been somewhat watching our videos for a little while now, you guys know that before we get to talk about what's physically happening on the chart, the technical analysis, we're going to discuss what is happening with the currencies. Let's discuss what's happening with the USD and the JPY respectively, okay? Starting with the JPY. Now, the JPY is starting off the week as one of our weaker currencies, and it has been one of our weaker currencies throughout several of the trading weeks. About 4 to 5 trading weeks, it has been one of our weaker currencies. Okay, this is due to the Japanese economy is suffering from inflation, just like majority of the world major world economies are suffering from inflation as well. Okay, and also Japan is suffering from the sanctions that's been placed on Russia for Russia's ability to trade goods and services with other countries. That has basically been put as a halt as sanctions to try to stop it from having its war with Ukraine. And Japan and Russia are very close to each other. And economics 101 is that you do business with your closest trading partner, and being that they're close to each other, Japan get a lot of its natural resources from Russia. Now, Japan does make some natural resources, but Japan is an island nation. So most things like precious metals, timber, oil, those type of things they have to get from Russia. And being that they can't get it from Russia, it's also catalyzing the inflation to go even higher and higher and higher. And also, on top of that, the Japanese government is taking a very lackadaisical stance on inflation. In order to combat inflation, you have to raise your interest rate to be able to bring inflation down. Now, about 2 trading weeks ago, we did have news that the Japanese did not increase their interest rate. They kept their interest rate at 10%, which only leads me to believe that they have other economic means or policies that they're looking at to try to combat the inflation, because they can't just let inflation get out of hand for its own citizens, because Japan is a democracy, and if the people that's in the government can't get it done now, they will get elected out. So I can see sometime in the very near distant future, Japan becoming a lot more aggressive with the combat and inflation in an attempt to try to quell down the prices for their citizens on gas and consumer goods. Okay, but as of for right now, until that happens, it's still going to be operating with one of our weaker currencies at the beginning of this trading week. Okay, now let's discuss the USD. Okay, now as we can see, the USD is starting to the USD has been one of our weaker trading currencies for the last several weeks, for at least about 4 to 5 weeks, also too. But now the USD is starting to show signs of life of strength. This is due to the increase in interest rate, different economic policies, and different economic policies and measures that the Fed and the U.S. government has put in place to try to bring inflationary prices down here in America, because inflation hasn't been as high since like the 1960s in America. So they are making attempts to bring this down, and also was also further catalyzing the USD strength is that the government and the Fed is talking about more stuff that they're going to be doing. So even though that these talks have not turned into actual plans of action, just them talking about it is giving people confidence in the USD, and it's starting to increase in strength. But we're going to have to see how this plays out during the trading week. We could just be opening the trading week with the USD showing some strength, but it could definitely change on us as different economic news and different situations situations around the world that affects economics starting to come out throughout the week. So we're going to have to see how this plays out. If we see that the USD strength remains up throughout the rest of this trading week, then that's going to be a good sign that the USD is on its way to becoming stronger and stronger and stronger. Okay. And this morning we have some news that's coming out around 8:30, and we're gonna have to check and see how this is gonna go out going to playing into the USD strength going into this beginning of the New York session and the beginning of this trading week as well. Okay. Now that we got all the now that we got all the fundamentals about what's going on with the currencies out the way, let's discuss what's been happening on the chart. Okay, so we was ranging for some time. We was ranging, and then we broke out of that range very aggressively. Now, this break in this range was not due to the USD becoming much stronger than the JPY. This is that the JPY became much weaker than the USD. Because during the time of this break in this range, the USD was still one of our weaker currencies, and it wasn't the strength that catalyzed this break as much as the weakness in the JPY. Okay. So during this time, we was having a battle of two weaker currencies, but this push up here, right, since the market opened, this is a representation of the USD strength. Okay, because the USD is starting to gain some strength. This is a representation of the US strength. But let's go back out to kind of give you guys an idea of how high we are. Last time we've been this high with the USD/JPY pair was 2015, over 5 years ago. Excuse me, over about 7 years ago. Okay, so we're in a situation, we're in a 7 year high. Now, I would caution about buying this when it's this high because you don't know how aggressive price is going to turn over. Okay, you don't never want to buy things when they start to get to high areas they haven't been to in a long time, or low areas they haven't been to in a long time, or all-time high areas or all-time low areas. You got to wait to see how aggressive the pullback is going to be. Okay, so there is a good possibility that the USD and the JPY pair is still going to continue to go up because of the fundamentals behind the JPY is still going to be a little shaky until the Japanese government makes a final decision on how to combat inflation, and that the USD is going to start gaining more strength and more momentum solely due to the how active the Fed and the U.S. government is in combating inflation. Okay, so with that being said, we most likely will still go towards the long position, but it may be a temporary sell off that may start to look like price turnover, but it's just probably going to just be aggressive retracement. Okay, so we may go as far back as here before we go up. We may go far back as here before we go up, or we can even go far as back as here before we continue to go up. Because, like I said, now we're reaching 7 and 6 year all-time highs. Okay, so there is going to be some retracement, and that retracement could be aggressive or could be moderate. So moderate retracement would be in this general area here before we tend to go up. Aggressive retracement is going to be in this area here before we go up. Okay, now is there a possibility of overall price turnover, or we'll just start going towards the short position? It's possible, but probability is not too likely because of how the fundamentals are acting towards the USD and JPY. Like we mentioned earlier in this video, the fundamentals for JPY is still going to be a little shaky to the Japanese government decides what exactly is going to do to how to combat its inflation. And that the USD, the Fed, the Federal Reserve, and the American government is taking a very aggressive stance since inflation. So probability of price turnover is not too likely, but we may have some moderate to aggressive retracement with it dropping down to here before we going up, or going down to even this area before we go up. You don't want to be stuck in a buy in this area, because I promise you, you may creep up a little bit more, but eventually price is going to turn over. Okay. Now, just because price is turning over does not mean that, oh, this is going towards a short position. Retracement is just temporary. It's just a temporary price. Retracement is just a temporary opposite of the position, a fundamental position, in order to get back into the fundamental trend. Okay. Because remember, charts are not unilateral. They just don't go up. They just don't go down. As you can see, they go up, they go down, they go up, they go down. They go up, they go down, they go up. So it's time for it to go down before it continues to go back up. Okay. Hope that information was helpful for you guys. Happy trading.